All right, guys, so welcome to the Beginners Bootcamp. This is the online version of the Beginners Bootcamp. All right, so this is a 3-day bootcamp for 10 trade clients, for funded 10 trade clients. In 3 days, we'll be exposing you to the fundamentals of trading in the financial market. So we are starting from the very basics of Forex trading. This event is powered by 10 Trade, Africa's foremost Forex broker, okay, global, world's foremost Forex broker, actually. All right, so I'm showing you how to trade in the financial market and how to trade profitably. All right, now let's talk about the definition of Forex. We are starting from the very basics. Okay, so what is Forex? Forex is an abbreviation of foreign exchange. Right, so it's simply the exchange of foreign currencies. All right, exchange of money from one currency to another. It is the largest financial market that averages over $6 trillion in trading volume daily. Now, let me take a step back and talk about financial markets, right? We have the crypto market. Most of us know what cryptocurrency is. We also know what the stock market is. So the crypto market, the stock market are also financial markets. The first market is also a financial market. Now, the first market is the currency market. So out of Forex market, crypto markets, and stock markets, the Forex market is the largest financial market that is averaging $6 trillion in trading volume every single day. What it means is that on a daily basis, the amount of transaction turnover that goes on in the foreign exchange market is averaging $6 trillion US. And the first market is open 24 hours a day, 5 days a week. So from Mondays through Fridays, all day, you are able to trade in the financial market, in the Forex market. What it means is that Forex market is not open during the weekends. However, the crypto markets can be traded during the weekends. Now, there is no physical location for the Forex market. Trading is done online. It's conducted through what we call electronic communication networks in various markets across the globe. All right. So let's talk about this particular concept here. It's called the contract for difference. Contract for difference. Okay. Now it says this type of financial instrument allows you to benefit from the fluctuations in the price of stocks, commodities, indices, and more without really purchasing them. Okay. Now, what we are doing as Forex traders is very, very similar to what your bureau de change would do. Now, in a bureau de change, they also trade currencies. They buy and sell currencies. But a bureau de change will need to have physical cash to trade. Okay. Now, unlike bureau de change, as a retail trader, as a Forex trader, you're also trading currencies, just that you will not be needing to have those physical currencies. You need to have physical cash. All right. What makes that possible for you and I is this concept called contract for difference. And in the financial market, as a retail trader, we make money based on the volatility of price. What do I mean by volatility? It means the constant fluctuations in price. One day price will go up, the other day price will go down. The exchange rate of different currency pairs does not stay on the same spots. It's always moving. So it is that movement that we are going to capitalize on to make money as a Forex, as a retail trader. Okay, and regardless of the direction of the strength of the market or a particular commodity, you can make money both ways. Either a particular commodity is gaining strength, is going up, is increasing in value. If the exchange rate is increasing over a period of time, Okay, you can make money as the market is going up. Also, if the market is going down, that means if the exchange rate of a particular currency pair is going down, right, you can also make money in that market direction. So regardless of market direction, you as a retail trader, you are able to make money. All right. So, and that is made possible because of this called contract for difference, or CFD for short. So as a retail trader, what you are trading is simply CFDs. You are trading CFD assets. Okay. Now, let's compare briefly the stock market and the Forex market. Okay. Now, in the Forex markets, what do we trade? I said in the first markets, we trade currencies, while in the stock market, we trade company stocks. Company stocks, who can give me an example of company stocks? Either stocks in Nigeria or stocks in the US or the UK. Okay, type in the chat box, give me an example of company stocks, the kinds of stocks that we can trade. Yes, David said Apple. Interesting. Correct. Who else has an idea of what stocks is? Okay, you have Apple, you have Facebook. Yes, David, you have Tesla, right? We have Google. Okay, so every country, every company, every Fortune 500 company that is listed on the stock exchange is a stock that can buy. AMD. Yes. All right. So you can also trade. So we trade company stocks in the stock market, while in the forex market we trade currency. All right. And comparing the forex market and the stock market, the largest stock market in the world is the New York Stock Exchange. That is where you have the Wall Street. Okay. Now, the New York Stock Exchange is averaging a daily turnover of 22 billion on a daily basis. Now, comparing that to the forex market, that is averaging $6.6 trillion, right? You can see there that the forex market is quite large. That means there is more volatility, or there's more volume in the foreign exchange market that you can trade. Now, it does not mean that you cannot trade in the stock market and still make money. Yes, you can. Now, the good thing about this is that on 10 Trade platform, you can be active in the stock market, in the crypto market, and in the forex market, because 10 Trade is a multi-asset broker, right? Leveraging on the CFDs that we talked about, you can buy currency pairs, you can buy stocks, and you can buy crypto pairs as well. And then you trade and you make money, right? So let's talk about the market participants. When we are talking about the, what's it called? If the forex market is averaging $6 trillion, you must ask yourself, who are the people responsible for bringing that $6 trillion on a daily basis? Where is that money coming from? So to answer that question, we have to talk about the market participants. Right? Now, let's talk about a participant called hedge funds, right? So hedge funds are financial institutions that trade for large corporations, that trade for high net worth individuals. So they take people's money, asset, trade it in the financial market. When they make a profit, they split profits with the investors. An average hedge fund has over $1 billion, right, in assets. And we have hundreds, if not thousands, of hedge funds globally. And those hedge funds are also investing money in the foreign exchange market, right? And number two, we have central banks. How do central banks influence the market? Every country has a central bank, right? central banks are the governing body for the currency of a particular nation. So when they implement some policies, when they make some changes regarding how the currency operates, it will affect how people are buying and selling that particular currency. It will affect the strength or the weakness of that particular currency. For example, when the Central Bank of Nigeria starts implementing good monetary policies for the Naira, you see that the Naira will start picking up, okay? So how well a central bank of the country is doing will have an effect on the strength of that particular currency. Now we have commercial banks, okay, like your UBA bank, like your GT bank. If you take it outside Nigeria, like your Chase Bank, HSBC, Wells Fargo, Bank of America. All right, those are commercial banks. And when you save your money in a bank, you are saving your money, and if you put your money in a savings account, for example, right, they are bound to give you interest on your money. You must not ask yourself, where are they going to find that interest? Right? An average commercial bank is going to invest, when you save your money in the bank, they are going to invest at least 90% of your money in various portfolios across the globe. Now, one market that they invest your money is the foreign exchange market. That's why when you go to an average commercial bank, they have departments dedicated. So they employ forex traders to trade a large capital. Right? They trade. So those are institutional funds. All right. Then you also have forex brokers. Forex brokers are financial institutions, just like 10Trade is a forex broker, that makes it possible for you and I to trade in the financial markets. Before the advent of forex brokers, only high net worth individuals could trade in the foreign exchange market. And you need somewhere around, at least I think it was around $500,000 or almost $1 million to trade. Okay. But now with forex brokers, trading in the forex market has now been decentralized in such a way that anybody with as little as $10 can trade in the financial market. So with forex brokers, we have more people knowing about forex markets. That means more people are buying and selling currency pairs, are buying commodities through forex brokers. We have companies, small companies like private equity firms, some investment funds that are also actively getting money from individuals, from other small companies as well, and investing in the market to make profits, right? Governments of other countries as well. So governments also has a role to play, okay, as to how money flows in and out of the financial markets. So when the government brings up a policy, right, or let's say the leadership of the government, how strong is the leadership? For example, when Donald Trump was the president of the United States of America, you notice that he would make some tweets on Twitter, and a single tweet, a single proclamation would move the market. Okay, that would determine how many people are buying and selling that particular currency. Now, last on the list are individuals like you and I, retail traders that wants to also make money trading in the financial market. So when we pull all of these market participants together, we are responsible for the daily turnover happening in the market, at least averaging $6 trillion on a daily basis. All right. Now let's move forward. So this, what forex brokers will do. Forex brokers, like I said, they are the middleman. So you are placing trades in the financial market through the forex broker. So the broker gives you leverage to trade in the financial market. Okay. So now, to trade in the financial market, like I said, for retail traders, you need to trade through a forex broker. All right. So if you've not created your account here, I did a quick survey at the beginning. I'll do that survey again, right? How many of us here right now have not created an account with TenTrade? All right. So you want to go ahead and create an account with TenTrade. I'm going to post a link on the chat box right now, and you go through that link to create an account. All right. On the website is a link to check out the website. All right, so I just posted a link on the chat box. All right, let me just also copy and paste it on the PowerPoint slide real quick. So this is for people that have not created an account with TenTrade, all right? So let's do this real quick. All right, so this is a link. Good. Can you see the link? So you want to go ahead and create an account right now. If you've not created an account, click on the link right now and then let me know on the chat box. All right. As a matter of fact, let's do the survey again. I have 7 people on this Zoom call. If you have an account with TenTrade, type in yes in the chat box. If you are just creating an account with this link, okay, type in just now in the chat box. If you already have an account with TenTrade before now, type in a yes. Please, let's engage with this class. There's a reason why I'm asking these questions, because I need to give you access to some information. If you have access, if you're already a TenTrade client, type in yes in the chat box. If you are just going to create an account with this link, type in just now in the chat box. All right, so most of us are already clients. Someone has not responded. So we have 1, 2, 3, 4, 5. All right, 5 of us. All right. Good. Okay, so most of us are already clients. Now, for those that watch the replay, you want to go ahead and follow this link to create your account with TenTrade, all right? And that will get you started. So access to being a TenTrade client gives you access to the ecosystem that we have available. In our ecosystem, you have access to Forex product and services. You have access to premium mentorship as well. So beyond just providing you with access to trade in the financial market, we also give you mentorship, okay? Because it is mentorship that will help you to be profitable. We want you to be profitable. That's why we are committed to education, all right? So you want to take advantage of everything that we have going on. So let's talk about what is traded in the financial markets. Like we said, we trade currencies in the financial market, all right? And we trade currencies. So globally, we have over 190 countries globally. What it means is that we have over 100 currencies globally. That means as a retail trader, you are able to trade over 100 currencies, including the Nigerian naira. You can trade the currency of Sudan or the currency of Somalia. and make money. But as a beginner, you don't want to focus on every currency out there. You want to focus on major currencies. And major currencies are currencies that have very high volatility. They'll give you a lot more trading opportunities to make money. Okay, so what are the 8 major currencies and their symbols? So I'm going to just talk about it. It's already on the screen. So you want to take a screenshot or simply write it down so that you don't forget. So we have the EUR is a symbol for euro. GBP is a symbol for Great Britain pound sterling. AUD is a symbol for Australian dollar. NZD is the symbol for New Zealand dollar. USD is the symbol for United States dollar. CAD is a symbol for Canadian dollar. CHF is a symbol for Swiss franc. JPY is the symbol for Japanese yen, right? So these are the 8 major currencies that you want to focus on, all right? So for now, at our level, please forget about every other currency. As a matter of fact, forget about the Nigerian naira and focus on these 8 major currencies. These are the currencies you'll be trading, okay, for the rest of your career. Okay, personally, I still don't trade outside these major currencies because I cannot exhaust them. So let's talk about currency pairs. As a retail trader, we cannot trade one currency in isolation. What it means is that we have to trade a currency against another currency, just the way we usually check out what is going on, the naira against the dollar, the naira against the pound sterling. Okay, because that is real foreign exchange, right? There's no way you can exchange a single currency to the same currency because it's one. So with currency pairs, 2 currencies are involved. And what we trade in the financial market in the foreign market are currency pairs. And every currency pair has its own exchange rate. There's an exchange rate. There's a rate at which you're going to exchange that currency for another currency. So for this particular example, we have a currency pair called Euro USD. All right, so let me backtrack for a bit and quickly do this. How do we arrive at currency pairs? All right, and I also want to give us an assignment that you bring to class tomorrow. So we have the 8 major currencies. You have the euro, we have the GBP, we have the what's it called? We have the JPY, we have the CAD. What else we have? We have the AUD, we have the NZD. What is it? So we need 2 more. We have the CHF, and then you have the USD. So these are the 8 major currencies. To arrive at a currency pair, what we do is we're going to be pairing each of these currencies against another. Okay, so the EUR against the, so let's do the currency pair for EUR. So EUR and GBP is Euro GBP. The Euro and JPY is Euro JPY. Euro and CAD is the Euro CAD. Euro and NZD is Euro NZD. All right. When you do the same thing for every other currency, all right, so let's do for GBP. GBP and JPY is GBP JPY. GBP and AUD is GBP AUD. All right. When you do this Same thing for every currency. When you pair them together, you arrive at 28 currency pairs. Now, these are pairs that you can trade and capitalize on market movements to make money. So you have opportunity to trade what? 28 currency pairs. This is more than enough things to trade for the rest of your trading career. As a matter of fact, I don't trade more than 3 to 5 pairs. So you don't even need to trade up to 28 pairs. There are some people that only trade 1 pair and then they are good. All right. So let's move forward. All right. So what do we have here? Let's talk about buying and selling currency pairs. The 2 major activities we're involved in doing as a forex trader is buying and selling currencies. At the most basic level, we are traders. Just like you have somebody in computer village buying and selling phone, right? That person is also a trader because he's involved in buying and selling. His commodity is funds. As retail traders, as forex traders, we are also traders. Just that our own commodity is now currencies. So we are buying and selling currency. So for somebody involved in buying and selling of currencies, how do you make money in buying and selling? You buy a particular commodity when it is low, and then you sell when it is high. That is how you make money with buying and selling. Okay. So, and we're talking about the volatility of the market. So you capitalize on how volatile the market is moving. So there are 2 major market directions. We have the bull market and the bear market. The bull market is a market when the exchange rate of a particular commodity or currency pair is going up over a period of time. That means there is strength in that particular currency. So there's a noticeable increase in price, increase in the exchange rate of that particular pair. So when you see that particular scenario, you see that the market is in a bull market, right? And how do you make money in a bull market? When the market is going up, you buy at a low price and then you sell at a higher price. On the flip side, in a bear market is when a commodity or a currency pair is losing value. That means the price is dropping from a higher price to a lower price. That is a bear market. How do you make money in a bear market? You sell high and then you buy low. So regardless of the direction of the market, as a retail trader, you can make money. Okay, so it's a constant tussle between the bull market and the bear market. So price will move from bull market to bear market, from bear market to bull market. All right. So the skill set that you are learning now is a skill set to know the best price you should be buying from and the best price you should be selling from. That will determine how much money you make or don't make. All right. So let's talk about the concept of a pip. What is a pip? Remember we said that the market is volatile. That means exchange rates move from one price point to another. There's usually fluctuations. So how do we measure fluctuations of price? When the market moves from one price to another, we measure that market movement with something called pips, right? So a pip is a unit of measurement used to show changes in the rate of a pair. It tells us how far price has moved within a particular period of time. So let's say, for example, you are at work and you are going home tonight. You are going to travel a distance. from your workplace to your apartment. And that distance is measured in meters. The smallest unit of measurement for distance is in meters, okay, because you travel from one point to another. Likewise, in the Forex market, exchange rate moves from one point to another point. And we need to measure that movement in pips. Don't worry, once we start talking about practicals, this will make sense to you. So we're going to do a practical today before we go home. Today, I want us to open a buy or sell trade today and see how it looks like to trade in the financial market. All right. So this is a currency pair, Euro USD. And then we're told that for Euro USD, price moved from 1.1006 to 1.1005 to 1.1006. Now, guys, give me a second. I missed something. Let me go to the previous slide. I missed something. All right. For other currency pairs, I need you to know the anatomy of the currency pair. Okay. So the first currency in a currency pair is the one called the base currency, and the second currency in a pair is called the quote currency. All right. When we get to more advanced structures, I'll let you know the importance of base currency and quote currency. Just know right now at our level that a currency pair is made up of the base currency and the quote currency. The base currency is the first currency in the pair. The quote currency is the second currency in the pair. And this is the exchange rate at this particular time. And then what it means is that what? 1 euro is worth $1.1302. All right, that means 1 euro is equal to 1.1302. Okay, in a nutshell, the euro is greater than the dollar. All right. Now, moving on. Talking about pips. So we're here. Now, there are two ways to calculate pips. We have the manual way of doing it, and then we have the automatic way of doing it. The automatic way of doing it is the easiest way to do it because you'll be using a tool on the trading platform to calculate pips. But it doesn't make sense for you to know how to calculate it manually without using a particular tool. Okay, obviously this is a business for you, and you must know pretty much basic things about your business. Okay, so how do you calculate PIP? How do you do that? If we are doing it manually, okay? So it's just a two-step process. Okay, in calculating pips for currency pairs, we have two types of currencies. We have we have JPY pairs and other pairs, okay, and every other pairs. JPY pairs are currency pairs that have JPY in them. Who can give me an example of a JPY pair? Type it in the chat box. Give me an example of a JPY pair. Okay, type your answers in the chat box. Let me know if you're following. Okay, give me an example of a JPY pair. Desmond said USDJPY. Chidima said JPY USD. Okay, so the right way to put it, Chidima, is USD JPY. Okay, David said GBP JPY. Okay, perfect. Good. So we have JPY pairs and other pairs. All right. So the two-step process to calculate pips is, number one, you want to subtract Okay, in this case, step one is to subtract the currency, the exchange rates that are trying to see where price move. So from the origin to the destination price, do a simple subtraction. So if price moved from 1.1005 to 1.1006, you want to subtract. Okay, give me a second. So how do you subtract this? You can use a calculator or you subtract offhand if you're a good mathematician. So 1.1006 minus 1.1005 is going to give us what? It's going to give us 0.0001. Isn't it? This is the value you're going to get. Okay. Now, step two. Step one is to subscribe, right? Step two is to move our decimal. Okay. Step two is to move this decimal number here. This one. Move this number some places forward. Now, for JPY pairs, you move the decimal number 2 places forward. And then for other pairs that is not JPY, you move decimal 4 places forward. So in this case, this 0. This one is not a JPY. So let me draw that again. So we have 0.0001. Okay, that's step one, subtract. Step two is now for other pairs that is not JPY pairs, you want to move the decimal 4 places forward. In this case, the decimal is here, so move it 4 places. That's 1, 2, 3, 4. So this one is down here. So our value will now be 1.0 pip. Okay. So that's why we're able to arrive over here that the market movement from here to here is a 1 pip. That's the 1 pip move. On the flip side, for JPY pairs like USDJPY, step one is the same thing, you subtract. Step one, you subtract. So let's subtract 104.20 and 104.21. When you subtract this, you're going to get 0.01. All right. That's step one, subtraction. Step two is to move the decimal number. So for JPY pairs, how many places forward? 2 places forward. So simply move this 1 and 2. So this is now the new decimal point. So the value of this is 1.0 pip. Yeah. Give me some feedback, guys, in the chat box. Is this explanation clear to everybody? If it's clear, type in yes. If it's not clear, type in a no. I want to carry us along as much as possible, okay? Okay, so Chidima said no. So let me take it one last time for Chidima, okay? So those that already know it, this will be like a refresher for you. So to calculate pips, manually. Step one is what? Subtraction. Okay. And then step two is to move the decimal number some position forward. Okay. Now, for Euro USD, price move from this to this. First step is subtraction. So you're going to subtract this from this. When you subtract 1.105 from 1.106, you're going to arrive at 0.0001. Okay, that's step one. Step two is to move the decimal, this decimal number here, this one. Now, what did we say in moving decimal? For JPY pairs, if it's a pair that has JPY there, you move the decimal number 2 places forward. If it is a pair that does not have JPY, you move the decimal number 4 places forward. In this case, Euro USD does not have JPY, so move the decimal 4 places to the front. So doing this to be 1, 2, 3, and 4. So the new decimal is now 1.0 pip. So that's 1 pip. For USD JPY, simply subtract this from this, you get 0.01. Since it's a pair that has JPY, the next step is to move the decimal number. So move the decimal number 2 places forward. So in this case, 1, 2, that's 1.0. So 1.0 pip. Is it clear now, Chidima? Let me know if it's clear, Chidima. Okay, give me some feedback, Chidima. Let me know if it's clear. Also, everybody else, if it's clear, type in yes. If it's not clear, type in no. Okay, Chidima said it's clear. Perfect. So that means we can move forward. All right. So let's talk about spread. So I wouldn't draw too much on this. When we say spread is simply the broker's fee. So spread is the money that the broker will charge you to help you place a trade in the financial market. So on every trade that you place, the broker is going to charge you a commission or a spread. So the good thing about this is that you are trading with a broker that has really very tight spread. So we are not eating into your profits with a very unrealistic spread. Okay. So when you start trading, you get to know more about spreads, and also I'll show you on the charts on your MT5 how to know the spread of a particular commodity or currency pair. Okay. So let's talk about lot sizes. A lot is the number of units of base currency that you can buy or sell at a time. Okay, so to really drive home this point, lot simply talks about how much of your money are you using to buy a particular currency, to buy or sell a particular currency pair. How much of your capital are you using? How much of your capital are you investing? For example, when the last World Cup, Argentina versus France, all right, for people that are into betting, sports betting, there are some that sided France to win. There are some that sided Argentina to win. Okay, and some people, they like to put their money where their mouth is. So they put a particular amount of money, they bet with a particular amount of money. Okay. Someone can bet with 1,000 naira or 10,000 naira. That 1K that you put down, that is your stake, right? In that particular bet. So if you make money, you make 1,000 times the profit times the odds. If you lose your 1,000. So that tells about your stake in that particular opportunity. Likewise, in the first market, lot size is what helps you determine your stake in a particular trade. It determines how much of your money, how much you are going to lose or make in a particular period of time. All right. So we have different categories of lot sizes, but we're only going to focus on these three categories here: standard, mini lots, and micro lots. All right. Standard lots, mini lots, and micro lots. So let me bring up my whiteboard here and let's do a bit of an exercise here. Okay. So we have micro lots, we have mini lots, and then we have standard lots. For micro lot is any number between 0.01 and 0.09. Mini lot is any number between 0.10 to 0.99. For standard lot is 1 to 100. Okay, so this is how you'll be setting your stake, and your stake will determine how much you make or lose in the market. You use a lot size. Okay, so how do we now let this make sense? How do we get the monetary value for all of these categories of lot sizes? So if you are trading with a lot size of the lowest micro lot, let's say 0.02, for example, how do you get the dollar value? Easiest way is just simply multiply this by 10. It's as simple as that. Just multiply this by 10. So that's 0.02 times 10. That'll give you how much? Okay, drop your answer in the chat box. Let's do this math together. What is 0.02 times 10? Hmm. 0.02 times 10 is not $2, no. It's 0.2. Okay, that's 0.20. That is 20 cents. 20. So if you use a lot size of 0.02, okay, what it means is that your stake in the market is 20 cents per pip. All right. So how do you transform the lot size into a monetary value? You simply multiply your lot size by 10, you get a dollar value per pip. So what it means is that if you take a trade now and then you make 10 pips profit, so and then you use a lot size of 0.2, which means every pip is worth 20 cents to you. So for a 10 pips profit, okay, that will be the value per pip is what? 0.20, 20 cents times the number of pips times 10. So that means this movement, you would have made a profit of $2. But if that trade goes against you and then you lost 10 pips, you would have also lost $2. If it's not clear, please let me know. Let's do an example. If you're using a mini lot size of let's say 0.1. Okay, Chidima, okay, so I'll do another example with the mini lots and for standard. Lot, so you understand. If you're using a mini lot of 0.1, how do you get the dollar value for this? Okay, you simply multiply it by 10. So that's 0.1 times 10. 0.1 times 10. That'll give you what? That'll give you $1. $1 per pip. What it means is that if you are trading with a lot size of 0.1, each pip will cost you $1. That means the smallest market move is costing you $1 in the market. That's how much you are risking per pip, $1. So if you place a buy trade, let's say you buy Euro USD, and then price goes your direction, 10 pips, you are in 10 pips profit. If you are in 10 pips profit on a lot size of 0.1, how do you know how much you'll be making? Okay, so that will be 10 times what? The value per pip. So you made 10 pips, right? What is the value per pip? $1 for this case. So 10 times 1. So you would have made a profit of $10 profit. If that trade goes against you, you'd have also lost $10 out of your capital. Okay, that's the first standard lot. If you use a standard lot of, let's say 10 points, 10.0 standard. How do you get the dollar value of that lot size? You multiply by 10. So that's 10 times 10. That's how much? I'll give you $100 per pip. What it means is that if you use a lot size, a standard lot of 10 lots, that means every pip in the market is worth $100 to you. Okay, so the tiniest move in the market is going to cost you $100. All right, so let's say you make a profit of 10 pips profit. The market went your direction. You are 10 pips in profit. If one pip means $100 for you, okay, how much would 10 pips be? So 10 pips will now be 10 times the value per pip, which is 100. So that means for a 10 pip move in the market, you would have made a profit of $1,000. Okay, so this level, trading standard lots, is a level where you want to get to as a forex trader, because that is when you start making the big bucks. That's when you start making thousands of dollars per trade. It's very, very possible, but you have to start somewhere. Okay, let me know if this concept is very, very clear. If you understand, type in yes in the chat box. Let me just ask again. Chidima, do you understand now? Okay, David understands, Desmond understands. Who else understands? Claire, perfect. So that means we can go to the next concept. So we're almost done with day one. Tomorrow we'll go ahead with some very interesting concepts. So let's go back to the chat. Now let's talk about forex trading sessions real quick. All right. So We have 4 major forex trading sessions. We have the Sydney session, Tokyo session, London session, and the New York session. So to make it very, very easy for you is just these sessions is based on the 8 major currencies that we talked about, which is the euro, dollar, yen, Swiss franc, AUD, NZD, CHF, okay, and GBP. So this sessions is based on when the currency are mostly volatile, right? We created sessions based on when the currencies are mostly volatile or when activities start on that particular currency. So let me give you an example, okay? We are all in Nigeria right now. We are all spending the Naira, okay? At what times of the day is Naira going to be active, okay? At what times of the day will the Naira going to be active? Can you give a time? At what time of the day? At what particular time of the day will the Naira start being active? Okay, Desmond said afternoon. Who else has another opinion? 8 a.m. David said 10 a.m. Okay. Now the Naira is going to be active when business starts in Nigeria. That is 8 a.m. Most offices or banks open by 8 a.m., right? So that means the Naira is going to be mostly active by 8 a.m. and then it's going to probably stop being active at, let's say, 5 p.m. because or 6 p.m. That's when banks close in Nigeria. So nobody's really trading. Even most shops, most offices close around 5 or 6. So there'll be little transactions around those periods. There'll be less volatility. So to answer your question, Chidima, you're asking what is volatility? It simply means how a currency pair is changing, is fluctuating, how the price is moving, okay? The strength of the move, that is volatility. That means it's volatile, something that is not static, it's volatile, okay? How quick the market moves. And in measuring volatility, it means that in these sessions, when the currency pair is active, there's a lot of pips. There's a lot of pip movement in that particular time. So let's just talk about each of them briefly. We have Sydney, Tokyo, London, New York. Sydney is in Australia, right? And we all know that Australia is ahead of everybody else. So they are the first people to enter the new year. So their time zone is ahead of everybody's time zone. So business starts in Sydney when? 8 a.m. Sydney time. That's when business starts in Sydney. All right. Why do we have a Sydney session? Because there are currencies that are going to be active in Sydney session. All right. And these are the currencies in Australia. Okay, in Australia you have AUD and then you have NZD. All right. So 8 a.m. Sydney time to 5 p.m. Sydney time, just simply convert it to your time zone. Okay, and then you get the value. All right, so I'm going to have to update this slide. So let's say this is Nigerian time. Let's change this to Nigerian time. Nigerian time, so somewhere around 10 p.m. 7 Nigerian time, 7 a.m. Nigerian time. Okay, Tokyo session for Tokyo, that means the mark for Tokyo session, which pair is active in Tokyo? Which currency do they trade in Tokyo, Japan? Okay, that is the JPY. So right here we have the JPY. So we trade JPY in Tokyo. Yeah. So just simply convert the 8 a.m. Tokyo is around 1 a.m. Nigerian time. In London, London session talks about the European session, countries in Europe, the currencies in Europe. So you have the euro, you have the Great Britain pounds, GBP, and then you have the CHA. All right, these are the currencies active that will be mostly volatile in this session. And then you have the New York session. The New York session, the currencies in North America, in US and Canada. So that is USD and CAD. All right. So as you can see, this first trading session is based on the 8 major pairs, 8 major currencies that we talked about. All right. It simply tells us when a particular currency is active based on when business starts in the domicile country of that particular currency. Okay, now as a Nigerian, my recommendation for us is that, and also for beginners, I recommend that you trade in the London and the New York session, which is 8 a.m. Nigerian time to 10 p.m. Nigerian time. 8 a.m. to 10 p.m. That is the London session and the New York session. Are we together? All right. So if you want to trade in the financial market, I recommend that you trade in the London session and the New York session, because you can see this session, they have more pairs. All right. And the pairs there are actually authority pairs, like the USD, like Euro, GBP. So there's usually more volatility in the London session and New York session over Sydney and Tokyo. All right, because a lot of currencies are trading during the London and New York session. So you see a lot more trading opportunities in the London session and New York session. But as you grow in your journey of forex trading, you might have affinity for a different session. There are some people that only trade Tokyo session. Some people only trade Sydney session. Some people only trade London session. So it depends on you at the end of the day. But if you are a beginner, right, focus on trading London and New York session. Chidima is asking again, what is volatility? Chidima, I answered your question a couple of minutes ago. Volatility is simply talks about a currency, the strength of the currency based on the pips. It means that a lot of movement happens in that particular currency, right? There is very high fluctuation in price. Price is moving from one point to another swiftly. Okay, there is a swift move, a lot of market move. That's when we say the market is very, very volatile. Okay, there's a speedy move, there's a speedy reaction of price. Hope that makes a bit of sense to you, Chidima. Okay, so let's move forward because of time. I want us to be out of here in the next 10 minutes. So talk about candlesticks real. Let's talk about a concept called candlesticks anatomy. Okay. All right. So David Mark, you're asking a question. What is margin and equity? We are going to get there. Okay, don't worry. So just follow along. We are working with a schedule. Okay, we'll get there shortly, either today or tomorrow. Now, candlesticks anatomy. There are two kinds of candles. We have the bullish candle and the bearish candle. Okay. Now, remember we said that how we make money in the market is based on the volatility, price moving from one point to another. That is volatility. So how do we know that price has moved from point A to point B? We represent it using something we call candlesticks. It's called Japanese candlestick. So we have two representations here. We have the bullish candle and the bearish candle. The bullish candle lets us know that within that particular time frame, price has increased in value. Price has moved from a low point to a high point. Okay, that is bullish candle. Remember, we said bullish means that there's increase in the movement of price. And then we have bearish candle. This is when there is weakness in that particular currency pair. That means prices has moved from a high point to a lower point. All right. So, and you can see the labelings here. So let's just explain that real quick. Now, this is a candlestick. In this particular time frame, you can see over here, this is the price at which price opened. This is the price at which this open price of the particular candlestick. It is here that this candlestick, this is open price. When price opened here, it went all the way up. And then over here is where we see, is where the market, where the price closed on this particular candlestick. So this is the open price. This is a close price. Okay. Now let me do a bit of a back. Jidima said, I can't see your pointer. All right. You should be able to see my pointer. Okay. Possibly you see it shortly, or you can log out and log back in. All should be well. Okay. Let me know if you can see my pointer, guys. Type in 1 if you can see my pointer. If you can see this thing, this pointer. Type in 1 in the chat box. Okay. All right. Let me get some feedback, guys. If you can see this is my pointer, this red thing, type in 1 in the chat. So Chidima can see it now. All right, perfect. So let's move forward. Now, I wanted to step back for a bit and tell something. Now, in the foreign exchange market, once you start looking at the current, at the charts, now you can, there's something we call time frames. Time frames. You can see how the market is moving based on different time frames. So if you want to see how price is moving every 5 minutes or every hour or every 1 minute or every 1 second, is possible. That's a time frame. Okay, or every 4 hours. So let's assume that this particular candlestick is a candlestick on the 5 minutes time frame. What it means is that it took 5 minutes for this candle to form here. And at this point, this is the open price. This is a price in which this 5 minutes candle opened. Okay. And after 5 minutes, it closed here. This is the close price. Okay. But within this 5 minutes, when price opened here, it first of all went down to this place. But it did not stay down. It started going all the way up. But that movement to this downside had to be recorded. So that's why we have the low price here. So price started going up, it went up, it came as high as here, okay, before eventually going back down to close here. But that high point had to be recorded using this wick here, okay? So the distance from the open price and the close price is called the body of a candle. And over here, where you have the high price and low price, we call it the wick. All right, so this is the upper wick, and this is the lower wick, W-I-C-K. All right, don't worry, it will be recorded, it's already recorded, and it will be sent to YouTube. The link will be sent to you, okay? Good. So now, very, very important. The next one is bearish candle. Bearish moving. Give me, hold on, guys. All right. So for bearish candle, this is where price open. Remember, for bearish, price is going down, right? So over here is open price, and then price will go down. That's going to close here. So this is the close price. This is the lowest that price got to in that time frame. This is the highest that price got to in that time frame. So what bullish candle and bearish candle helps us to know is how price is moving. So it gives us a visual representation of price movements. That's what candlesticks help us to know. It helps us see everything pictorially. It gives a visual cue. Okay, and then you know how price is moving from one exchange rate to another exchange rate. All right. So now let's talk about the trading platform. How do we trade in the financial markets? Where do we do our analysis before we start taking entries? All right. So let's talk about trading platforms. So today we are going to talk about MetaTrader 5. All right. So you want to go to, so MT5 or MetaTrader 5 is our trading platform. This is where we do our analysis. This is where we analyze the market. So we have the opportunity to have a visual representation of how price is moving. And then once we are done analyzing, this is also where we are going to be placing our buy and sell orders. So we do trading on the MetaTrader 5. So what I want to do right now is to download this mobile app on your phone. So on the Play Store and on Apple Store, you can download MetaTrader 5. So I'm going to wait for a few seconds. So let's download right now. How many of us here have MT5 on the phone? If you have MT5 on your phone, type in MT5 in the chat box. If you have MT5 on your phone, type in MT5 on the chat box. Ebert Desmond said MT4. No. So at 10 Trade, we trade with MT5, right? MT5 is an upgraded version of MT4. It's just like MT5 is like iPhone 14, and MT4 is like iPhone 11. All right, so you have more better features and bit more stability. So you want to download MT5 on your phone. All right. So how many of us here have MT5? Okay, only Desmond has responded. So Desmond, you want to go ahead and download MT5 on your phone. Do that right now, because we're going to be starting practicals shortly. David said, I have MT5. All right. How about Glory Ugu? Do you have MT5 on your phone? Glory. All right. So now let me log in with my phone. Now, the next thing I want you to do, now for all of us here that says you've created an account on 10 Trade, the next thing we now want to do is to create a demo account. So let's create a practice account on 10 Trade platform. So let's log into an account on 10 Trade. All right. So let's go to 10.trade, which is your dashboard. So for all of us here right now, you've all created your account on 10 Trade, right? So you want to go to your 10 Trade dashboard. How do you locate your 10 Trade dashboard? You want to go to www.10.trade, as you can see on your screen right now, the website. Go to website and then you click on login. When you click on login, you want to log into your account, all right? And then you want to open a demo account right here. So at the very top, once you've logged in, you see the option to create a demo. Okay, so David has one already. Good. So let us just walk through this process for those that have not done it and for those that watch the replay. So you want to click on Open Demo Account at the top right here. Okay, so click on Open Demo Account. Click on Select Demo MT5. Leverage, just leave it as default. Initial balance, select something close to what you are going to be funding. Okay, don't go and select 100K when you'll be funding $100. All right, because it will take you a longer time to transition from trading a 100K demo account to a $100 account. So if your goal is to fund $100, select 1,000 here. It just makes it easier for you to transition from practicing to a live account. All right. So click that. Let's click on continue. Click on continue. All right. So once you do that, immediately this is your demo details here, your MT5 login details. Also, these same details is going to be sent to your email address. Okay, so this information now is what we will now use to log in to our MT5. So I recommend you take a screenshot of this, or you just simply save the email that was sent to you, so that at any point in time, you can easily go to your mail and get your login and password. So we are concerned about this login ID and then this password. you can see that there are two passwords. There's normal password and investor password, right? What you are concerned about is the normal password, which is this one right here. Okay, so let me connect with a phone, and then I'll show you how to log in to MT5. Okay, I'm going to make, so the next step right now, guys, is to log into our MT5. All right. So how do you log into MT5? All right. So on MT5, let's do this. So this is your MT5. Once you are on MT5, possibly you see something like this. Okay, let's wait for my screen to share. Hold on. Hold on for the screen to load up. There's a bit of network delay here. I want to show us how the MT5 looks like on the phone and how you are going to log in. And then we want to place our first trade today. Okay, so once we place our first trade today, we'll continue tomorrow with real practical. So today, at least let me introduce you to what it looks like to trade. If you can see the mobile version of MT5, type in yes. If you can't see the screen yet, type in no. All right, let me be sure that it's not from my end. If you can see the screen, the mobile version of MT5, type in yes. If you can't see the screen, please type in no in the chat box. Not yet, okay? So hold on, let's try that again. Stop share. Let's share content. Hold on. Okay. So can we all see the screen now? So you should be able to see the MT5. So this is how MT5 this is the iPhone version, which is something like this. So how do we log in to your MT5 demo account? So I would attempt to do for Android and iPhone if time permits. Okay. Now, but very, very simple. For Android or for iPhone, you want to come to the very bottom here. You see settings, and then you want to click on at the very top, you see new account. Okay. That is the first step. For Android users, if you are seeing me right now, for Android users, if you're on this quote tab, at the very top, at the top right, at the top left rather, you see that 3 lines at the top left, that menu option. Click on the menu option, and then you're going to see something called manage account. So when you click on manage account, it's going to bring you somewhere here. So you see something like this. When you click on the top right, the top left 3 lines there, click on manage account. Okay, and then you click on the plus sign. There's a plus sign at the very top to add an account. So for iPhone, you see new accounts. For Android, you see the plus sign at the top to add an account. So now you want to add your 10 trade server first. So you are trading with 10 trade, right? So at the very top here, search for 10 trade. So put TEN trade, 10 trade. So when you type in 10 trade, you are going to see the server come up. Just simply select it. Okay, when you select it, you see exactly the same page. Now you see real account or demo account, and then use existing accounts. Because you've already created an account, you are going to use an existing account. So you are only concerned about the login. All right. So your login is one you created, and then your password. All right. So we're going to quickly go. So let me quickly go to my email, and then let's just quickly copy and paste. All right. So this is the email that was sent when I created the demo account. So this is my login, and this is my password. I just simply copy. My login is 5064. All right. 5064. And then for password, I'll just paste it over here. Okay. Once I'm done with that, at the very bottom, we'll click on sign in. You can see once you do that, you see the $3,000, which is what is on my account. Okay. Let me know if we are signing. David, Mark, and Glory, are we all signed in? Are we signed in? Okay. Are you signed into your demo account? All right. David said yes. Perfect. Okay. Can I get feedback from Gloria as well? So Gloria has not responded today at all to any of my questions. All right. So we'll just go ahead. So now I want us to open a trade. If you are watching this replay as well, don't just watch and be a spectator. I want you to also engage and do everything we are doing. Okay. Now let me just do a brief overview of the MT5 terminal. This is your MT5 terminal. At the very bottom, you see some options. You see the quote tab, you see charts, you see trade, you see history and settings if you are using iPhone. If you are using Android, in that place where you have settings, you are going to see messages, right? But the first part is the quotes. The quotes will give you a list of all the currency pairs available for you to trade. And by default, you are not going to have all of the currency pairs here. So there are times that you might want to trade a currency pair and it's not on this quote tab. All right. So if you are checking this on your Android phone, at the very top, where that pencil icon is, at the very top, you see a plus sign. If you're using Android, you see a plus sign there. So just simply click on that plus, right? If you're on iPhone, you see at the very top, enter symbol for search. Simply click on that search. You see these folders here. If you click on the plus sign on Android, you see the same page. So, and like I said, on 10 trade platform, you can trade Forex, you can trade crypto, you can trade stocks. All right. So if your goal is to add currency pairs to your quotes tab, click on Forex, and then simply add any pair you want to add over here. Okay. If your goal is to add stocks, come here, you see all the stocks that you can trade. All right, you can see Marriott, Lyft, Dropbox, Wix, a lot of stores that you can buy. Okay, you can try Google as well, Boeing, eBay. All right, Netflix, Oracle. Are we together? Okay, Alibaba and the likes. You can also buy cryptos, Bitcoin, USD. You can buy Bitcoin, you can buy Ethereum, you can buy Litecoin, you can buy the XRP, you can buy Dogecoin, you can buy Cardano, right? You can buy Bitcoin Cash. A lot of pairs you can buy here. So anyone you are interested in, you simply add it into your quotes and then it will be populated here for you. Okay, glory. Awesome. So the next tab is the chart. So this chart tab is where we are going to be doing all our analysis. Okay, as you can see on the chart tab, we have the candlesticks here on the chart tab. Okay, so this is where you're going to be analyzing the market, knowing to give you an area where you should be buying and selling. So tomorrow we are going to dwell deep into market structure. Tomorrow you will learn how to understand the charts. Right now, this chart might look a bit abstract to you. It might not really make sense to you. But as from tomorrow, when we talk about market structure, it will start making sense to you. Okay? Now, you can check the chart of any currency pair that you like. And you can also change the time frame of the chart. Right now, I'm on a pair, I'm on the chart of a pair called GBP USD. And I'm on the 5-minute time frame. I can change this time frame, okay, to any other time frame. If you're on Android phone, you just simply tap on the screen. When you tap on the screen, you're going to see a round thing show on the screen. And on that round thing, you see M1, you see M5. M1 is 1 minute, M5 is 5 minutes, M15 is 15 minutes, M30, 30 minutes. H1 is 1 hour. H4 is 4 hours. D1 is 1 day. W1 is 1 week. MN is 1 month. All right. So, and on iPhone, you also see it at the left-hand side. So let me change to the 1 hour time frame. So you can see, you see a different chart representation. Now, this is the 1 hour chart. What does it mean? It means that every candlestick here, it took 1 hour for each candle to form. So this is how price has been moving every hour, okay, since when the market started. Okay, so based on the hourly time frame, you can analyze. You can analyze based on any time frame that you choose. That will guide you into the price in which you want to enter. Again, the skill set that we are learning, guys, is a skill set to know the best zones that we should be buying from. Okay, or the best price that we should buy from. And charts gives you a visual indicator, okay, of how price is moving. So the skill set now is to learn how to analyze the charts, how to understand this candlestick in such a way that you know exactly when you should be buying and when you should be selling. All right. So that is a chart in a nutshell. We're still going to go deep into MT5. But let's do our last exercise for today. I want you to open a pair. So let's open a trade rather. So let's open a trade on Euro USD. So I want you to select. So select Euro USD on the quote tab. So just simply tap on it. Okay, if you're using Android, you might need to tap on it for about 1 second. So, but for iPhone, when you tap on the currency, you see trade. On Android, you are going to see new order. You see new order on Android. All right. So click on new order, and then I'll click on trade for iPhone. And then we want to enter the market. So over here, at the very top, you see market execution. Now, let me just explain that briefly. So when you click on that arrow sign, now there are different ways you can enter the market. You can enter the market instantly. To get instant access into the market, you need to use the market execution option. Now, we also have what we call pending orders. Tomorrow, we'll also go deep into pending orders. But pending orders is simply, you are the one that will set the price in which you want to enter the market. All right. So instead of you entering the market at current market price, you can set the price at which you enter. So for pending orders, you see a lot of options. You see sell limit, buy stop, sell stop, buy limits. All right. We'll talk about all of that tomorrow. But today, let's take a quick trade. Select market execution. The next thing is the lot size you want to use. At that middle, you can see 0.05. That's where the system is requesting you to set your lot size. Do you want to use a micro lot, mini lot, or standard lot? By tomorrow or Friday, we are going to talk about how to know the right lot size you should be using based on your account size and the trading setup and the trade setup. So you don't want to miss tomorrow's session and Friday's session. But let's just use a random number. Use a micro lot of 0.01. Okay. And then you'll be asked about your stop loss and take profits. Okay. So tomorrow as well, we will talk about stop loss and take profit. But let's just go ahead and place a trade. Click on the buy market. All right. So when you click on buy by market, you see your running trades. So automatically you'll be redirected to the trade tab down below. I want everybody to at least open a trade, all right, and see how it looks like to be on a trade. When you are in a loss, your running trade is going to be in a negative. If you are in profit, it is going to change to blue. All right. And to answer your question, David, about equity and margin. Equity is simply the difference between your balance and the running trade. So right now, with your running trade, we are in a loss of 6 cents. So your equity would now be your balance minus 6 cents. If you are in a profit of 6 cents, it will be your balance plus 6 cents. I hope that's clear. All right. So margin really talks about, it depends also on the leverage that you use. I'll just focus on the free margin part, all right? Because when we start going deep into margins, okay, it might take us into another set of calculation, all right? But just know that margin just gives you an idea into how many more positions can you open, how many more buying power do you have. So if you are trading, so let's quickly do this. Let me quickly share screen. Okay, disabled. There's something called leverage. If you are trading with a leverage of, let's say, 1 to 100, like I said, the broker gives you access to leverage. When creating an account, you'll be asked for leverage. So you see leverage 1 to 500, you see leverage 1 to 100, down to leverage 1 to 50, down to leverage 1 to 1. So let's say you are using 1 to 100 leverage. What it means is that the broker is going to match $1 to $100. So that means for every dollar that you have to trade, the broker will match it with $100. So if you are trading with $100 in the foreign market, you have a buying power of $10,000. So what it means is that you can get involved in more trades, in more trading opportunities. All right. That's simply the concept of leverage. You have a higher buying power. For someone that has a leverage of 1 to 50, for example, it will get to a point that you cannot enter more trades because you have a lesser leverage. All right. And someone that has a leverage of 1 to 500 can be very, very aggressive and get involved in a lot of trading opportunities. So it depends on your goal as a trader. If you want to be aggressive, you use a high leverage. If you want to be conservative, you use a low leverage. So as you are trading, based on your leverage, you see the value there on the free margin. So that free margin would give you an idea as to how many more positions can you enter in terms of lot sizing. Yeah, how many more units of a particular currency can you buy? All right. So as you can see, our running trades now, we're in profit. It has changed to blue. Okay. So now we have running trades. You can close your running trades. You can modify your positions. By modifying positions, it means that you can modify your stop loss. You can modify your take profit. Tomorrow we'll talk about stop loss and take profit. Don't worry. But today, I'm very, very happy that we've gotten to a point that we are exposed to the MT5 platform. You know how to open a trade, okay? And then I believe that you've opened it on your own terminal as well. So next thing we want to do right now is to close this trade. How do you close a trade? All right, you simply tap on it, or on Android, you tap on it for about 1 second or so. Okay, once you tap on the running trade for about 1 second, you see the options to close position, modify position. So click on close position. All right, and then you see close with profits. So click on close with profits. So once you do that, okay, the trades are as closed, and it will reflect on your balance and equity and free margin at the top. When you go to the history tab, the history tab gives you your transaction history, all the trades you've taken in a particular period of time. Good. So David said I've closed position. Fantastic. I'm sure you made a little profit on Euro USD. All right. So guys, tomorrow we'll go deep into market structure. Please don't miss tomorrow's session. It's very, very important that you are here tomorrow so that you will well carried along. 5% profit. Good. Do you have any questions, guys? We've come to the end of this particular session. Do you have any questions? So for everybody joining here, for David, Glory, and everybody, we're going to add you to a particular WhatsApp group. It's recommended that you fund your account with minimum of $100. Ideally, the prerequisite to access our workshop, this 3-day workshop, is to have a minimum of $100 in your trading account. This is money that you yourself are going to be using to trade. All right. So nobody is, you're not paying anybody money, right? This is money that you are going to be trading with. Okay. So that is your own show of commitment. All right. So because by tomorrow, only people that have some money in their accounts will be allowed to participate in the workshop. And I'd like to see everybody here tomorrow. So ensure that you get in touch with your account manager, okay, fund your account with money, and then you'll be here for tomorrow's session to continue this awesome 3-day bootcamp. All right, good. So don't worry, David, I'll answer your question tomorrow. Okay, because of time, we have to round up. We are way past our time for this particular session. All right. So thank you so much for being a part of this session. I'll see you in day 2, which is tomorrow, same time tomorrow for this online session, 6 p.m. Nigerian time. If you are in Lagos and you have time on your hands, you can come to the office tomorrow afternoon by 12 p.m. We have a lot of people that will also be here tomorrow afternoon by 12 p.m. to be a part of the beginners bootcamp. All right. You know, physical sessions give some certain kind of understanding. You can really ask your questions and get good engagement. All right. So I want to wish us all the very best in our trading journey. I will see us tomorrow. Good night, everybody. Bye-bye.